In this video, I am going to explain about the credit creation by the commercial banks. So, in any economy, commercial banks play an important role in the credit creation. So, commercial banks are called the factories of the credit. So, commercial banks accept deposits, different types of deposits from the public. So, after receiving the deposits, commercial banks give loans and advances deposits, and the second one is derivative deposits. Primary deposits is customers deposit cash or check. So whenever they want amount from their deposits after depositing in the bank, so they can withdraw with the help of withdrawal form or check. These deposits are called primary deposits. So out of these primary deposits, banks makes loans and advances to its customers. The role of bank is passive, so that's why primary deposits are called as cash deposits or passive deposits. And the second type of deposits are called as derivative deposits. Bank deposits also arise when a loan is granted. So when a bank discounts a bill or purchases government securities, so this amount can be given to the depositors, or it can give loans and advances to the public. So that is why these deposits are called as active deposits. When the bank buys government securities, it does not pay the purchase price at once in cash. So it will give uh, loans and advances to the public. So this process of credit creation is called, so that means whenever it is giving loans and advances to the people, so that is called credit creation. So in the process of credit creation, the banking system as a whole can create that is original increase in the deposits of a bank. So there is any withdrawal in the bank, so it leads to the process of multiple contraction of credit. That means whenever the depositors are depositing, so that amount will be there in the bank. So if at all the bank is giving loans and advances, the total amount can be transferred as loans and advances. If the people are withdrawing the amount, then there will be a contraction of the credit. So for example, if there are three types of banks, that is A, B and C. So there is a rule that every bank has to keep 10% of cash. So a new deposit of 1000 rupees has been made with a bank A to start with. For example, a depositor has deposited 1000 rupees with a bank. So then what will happen? So bank A will receive the deposit of rupees 1000 rupees, and then it will keep 10% as cash, and then what will happen, the remaining amount 900 rupees it will give as a loan and advance to the public. So again, the person who is taking loan and advances, he will deposit 900 rupees in the bank B. So what is the rule? 10% of the amount it will keep as a deposit, cash deposit, and then what will happen? So the 90% it will keep, and then 810 rupees it will give loans and advances to JED. So again the JED, so 810 rupees it is keeping as a deposit. So what is the reason here? That is 10% of the amount. So 10% of the amount it will keep as, so 81 rupees it will keep as a cash, and 729 rupees it will give as a advance to the public. So what will happen? So here, so bank A is 1000 rupees, bank B is 900 and 810 rupees. So the total deposits are 2710 rupees, and the three banks, A bank, B bank, C bank, and all these banks will keep 271 rupees as cash reserve, and the remaining 2439 rupees it will give as a loan to the public. So this process, so it is accepting deposit 1000 rupees, bank A, and bank B 900 rupees, bank C 810 rupees. All these are called deposits of the bank. and then it will keep 10%, that is 100 rupees, 90 and then 81 as cash reserves with the banks, and then it will give loans of these three, that is 900 rupees, 810 and 729, total 2439 rupees three banks will give as loans and advances to the public. So this process is called as credit creation. That means how the commercial banks are receiving loan cash deposits, how it distributes the loans and advances to the public. The process is called as credit